Hi and welcome to my channel. For those of you new, my name is Dave and I work in financial services, and these videos are a mixture and journey towards my development towards financial freedom. They will cover financial products and also about improving your financial well-being so you, like me, can reach your financial goals and aims sometime in the future. So let's get into this latest video. This latest video is about my stocks and shares ISA account and the review for the month of June 2022. For those of you new, the plan is to make year-on-year growth of 10%. For 2022, annual dividend of £1,200 and a year-end value of £80,000. Start of the month at £64,186. We ended the month with a value somewhat lower because of market conditions of £61,751. A loss in the month of £2,435. Start of the month, the portfolio was down 8.74% year to date. The end of the month, it was down 9.34% year to date. Not a great performance, but it has been affected by global events. Thankfully, it's not in a tracker fund or it's not mainly America based. Otherwise, the losses may well be in excess of 20%. Now, during the month, we encountered monthly fees from our platform provider of £11.02. We made contributions of £512.50, and for the tax year to date from April onwards, we've invested £10,512.50, and predominantly based in the UK and predominantly based in financial services. If we look at the following chart, 59.24% is in the UK and Europe, 24.36% is in the Americas, and 16.4% is in Asia. Look at the following chart in relation to dividends received. So during the month, just the one dividend, but a very nice dividend. Legal & General, a yield of over 7%. It gave us £337.32. We reinvested that into Legal & General at a cost of £1.50, and it gave us 128 new shares. For the year to date, annual dividends £802.59, so nearly at our target. Okay, we'll reach it very soon. And we do have 9 shares in the portfolio, and across them 9 shares, giving us an average yield of 4.37%. Now, just a quick run through of where our holdings are and some of the reasons why we hold the holdings. With relation to our shares, we own 9 shares, 4 in profit, 5 in loss. Total shares are worth £26,269, makes up 42.54% of our portfolio, of which 38.56% is in the FTSE 100 and 3.98% is in the FTSE 250. And just an overview of our largest holdings. Our largest holding now is Legal & General, 2,878 shares, £6,892, 11% of our portfolio. Been on a buying spree lately because it's given a very good yield of over 7%. Our original largest holding was Lloyds the Bank. We own 16,097 shares, £6,810, 11% of our portfolio. Our next holding, somewhat restructured lately, was Aviva. We are 977 shares, £3,920, 6.35% of our portfolio, but has done a very buyback restructuring lately, very good dividends, and just like Legal & General, is very cash rich and giving a very nice yield, over 5% at the moment. Our next holding is Barclays Bank, 1,519 shares, £2,325, makes up nearly 4% of our portfolio. Our next holding is Sainsbury's, the retailer, 796 shares, £1,623, 2.63% of our portfolio. It will pay a very good dividend at the start of July, and did have a very good trading statement in the past month. Our next holding has somewhat struggled lately. It's Card Factory, the retailer. 2,817 shares, £1,300, but it makes up 2.1% of our portfolio. Has sorted some debts out recently, is very cash rich, but not paying dividends because of the lending criteria. But hopefully will be formed back to its regional holdings or value in the coming months or years, as it is a very cash rich and cash generative performance or share. Our next holding is another bank, but it was done for diversification. It's HSBC. 236 shares, £1,264, 2% of our portfolio. Again, it does pay a very good dividend. And then we also own our platform provider, AJ Bell. 432 shares, £1,160, makes up nearly 2% of our portfolio. It will pay a small dividend at the start of July, has had very good numbers recently, lots of new clients, lots of assets under management, but the share price has struggled in the coming months. And then finally, our smallest holding is NatWest Bank. 445 shares, we put in £1,000. It's now worth £971, makes up 1.5% of our portfolio. Just like the banks, it was done for dividends. It's cash rich. Hopefully interest rates will increase, margins will increase. And with regard to NatWest, the government is reducing its stakes from its ownership, so the shackles are off, and hopefully it will give us a free run to control itself and increase dividends moving forwards. So a quick recap, £26,000 in shares, 9 shares, 4 in profit, 5 in loss, but all bought for long-term holds and some very good yields, an average yield, as I said, of over 4%, well above the current yield of the FTSE 100. And we see no reasons why we should sell any of them shares in the short term unless market sentiments change or something fundamentally change within a certain company. And moving forwards, our plan is to reinvest all dividends, and we will actually increase some of our existing holdings through future contributions. Now, moving on to the funds held within the portfolio. At the moment, we own 13 funds. Somewhat struggled lately, 8 in profit, 5 in loss. Fund values collectively is worth £35,445, makes up 57.4% of our portfolio. It was done hopefully to reduce risk and diversify, but unfortunately that has not happened during this year to date. Our largest holding is a passive ventures fund, so it owns numerous sectors. It was done for it's cheap, and it was done for diversification because we were solely UK based. Now in the month we actually topped up our existing holding with £500. So at the moment we own £8,900, makes up 14.41% in a passive adventures fund. Our next holding is somewhat struggled lately is a technology fund. £5,340, 8.65% of our portfolio. A global equity fund is next at £3,463, makes up 5.6% of our portfolio, but the fund is down about 20% this year to date, hopefully a short-term blip. Our next holding is somewhat selective. It's a Ballygifford positive change. It was done against greener issues, all safe, secure companies moving forwards, what we call pioneer companies, but it owns about 30 to 35 stocks, quite selective. £3,289, 5.3% of our portfolio. Our next holding is somewhat struggled. It was showing a very nice profit till recent events in America, which has struggled during this year, is a US smaller companies. £2,900, makes up 4.7% of our portfolio. Our next two funds somewhat buck the trends. They have struggled in the past 12 months, but during this month they're actually increased in value. The first one is a China fund, £3,400, makes up 5% of our portfolio, and an emerging market fund, £1,800 makes up 3% of our portfolio. For some reason, China and emerging markets have had a very good month, but obviously global markets and America has struggled in the past few months. Now, other funds we own an AIM fund, we own a UK equity fund, we own a small cap fund. Down to our largest fund is a fund in Russia. We put £500 in, it went up to £650. Obviously the Russia-Ukraine war has happened. The fund is now worth £310. Obviously a loss, around about 40%, but thankfully it makes up a tiny percentage of our portfolio, 0.5%. And again, like our shares, we see no real reason why we would cash in any of our investments. And as we have proved, we've topped up on our existing holdings of £500 done for diversification. So just like our shares, no reasons why we're going to sell any funds unless market sentiments change in a dramatic fashion or the managers change within that fund. Okay, hopefully the markets again, they have struggled, down 20% in Americas, obviously affected the wider audience on our shares. But hopefully, because we were so UK based, we are down, but not as bad as the markets. And we show no reason, hopefully moving forwards, the markets will recover. We may not get our objectives of 10% this year, but it's on an average, it's a long-term portfolio. We're not going to sell shares at a loss, it defeats the object of investing. Remember, if you like the videos, smash the like button, subscribe to this channel, and we'll see you again in the next video.